Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it's still panning out to be a very lackluster day of trade, narrow band choppiness that you've been seeing throughout the course of the session today. We're still hovering around 25,436, 23 points lower. But you've seen it's a very cautious chart that is in front of you. There is directionless move that we have been seeing on the frontline indices at this point. The Nifty is lower, the Nifty Bank is lower, IT is down in trade almost a percent. You have media stocks, metals that are declining. Even the broader markets have pulled down 0.4% each. We have autos, pharma, private sector banks, PSU banks, even financial services. All of these heavyweight pockets are actually down in trade. But what's hovering higher? It's FMCG. So the market breadth is somehow favoring the advances which we are seeing in the select pockets from the defensive pack, like FMCG, for instance, today. Oil and gas is higher on the back of subdued oil prices. Real estate stocks are moving up. Infra stocks is also higher in trade. On the Nifty, towards the closing end, you have HUL as the top mover, holding up its position as the top spot, 3% higher. Nestle is moved up. Reliance Industries is pulled up almost a percent now. You also have Eicher Motors that's pulling up in trade. ITC, Tata Consumer Products, these are the other consumption names that are higher in trade. On the downside, BEL has declined a bit. Tech Mahindra, Hindalco, oil and natural gas. You also have Eternal. These are the pockets that are lower in trade. But let's welcome our guest on board to understand, what is keeping the markets from really take a direction. Kunal Rambhia joins in. He's the founder of The Streets to share with us his views on the markets. Hi, warm welcome to you, Kunal. Good to have you with us. First up, help us with your fresh view on the markets ahead of the two big triggers that we are watching out for, the tariff deadline and the earnings right now. Do you think an uncertainty on both is leading to some cautious trade on the D Street?
Good afternoon, Sakshi. Thanks for having me on the show. So yes, as you rightly mentioned, two uncertain events, and because of it, the markets are lackluster. And it's been a pretty long time now. The Nifty is being in the sideways consolidation mode after the good rally on 26 June. It's been almost 6 to 7 days. Broader range is already formed in Nifty. On the higher side, we have a resistance at around 25,650, and the support is placed around 25,350. We are just in between that itself with positive bias. So yes, the indices are not showing any great moves right now, but buy on dip can be a good strategy, keeping in mind these levels which we just discussed.
Got that. But Kunal, overall, have you been reading into what's happening around, the big news that came in last week was Jane Street. And today we've also heard the Sebi chief again talk about how Sebi may be coming out with a white paper with increased scrutiny on the market volatility seen on expiry options as well. And he's also indicated that, of course, the data that will be coming out on the white paper will highlight what kind of losses have been incurred on weekly and monthly options expiries as well. How important is this data going to be? What should a retail investor really find that out? In case, the losses are stark, what other measures do you expect Sebi to really take now?
Sakshi, it's very clear and obvious that once you're into derivative with the because of the leverage situation, the losses are gonna be magnificent if there is no proper risk management in place. And that's what has been the learning for me in the market also, that if you take up any position, you should be ready with the extreme tail risk also, which generally most of the retail investors have avoided. And the companies like Jane Streets have taken the advantage of such things, then definitely the volatility was significantly higher. But whatever the outcome is gonna be in the white paper, but I still feel that whether the volatility is higher or lower, on a general note, one should be aware of the risk which one is taking, number one. And number two is there should always be a ready exit route before you enter the position. If these two things are answered, I think there won't be much of a worry. Yes, this white paper which we are expecting from the SEBI will have the impact on the sentiments, but I think the overall volume should not significantly go down. And that's what is seen even in today's market. The traders are actually making good money if they have a good strategy. But again, one needs to be very cautious on the risk management front.
Absolutely. Also wanted to ask you on the other trigger that we are waiting to find out, the Q1 earnings. What is your expectation from the earnings season this time around? Do you expect to see a marked improvement? Will it be another quarter of subdued performance? Are you also keeping an eye out on some sectors that could turn out to be an outperformer or so when it comes to the Q1 numbers?
Absolutely. So I personally feel that this quarter results are gonna be really better because the base effect of the previous year is very very low. The look at the company's performances like in the sector of IT or pharma, they were muted in the last year. So I think this quarter numbers for them are gonna be positive, but we haven't really analyzed other sectors yet. Because we are going very, very stock specific for the coming quarter and even for the remaining year, the entire calendar year 2025. So not focusing much on the sector specific, but more on the stock specific. But broadly, we are bullish on IT and we continue to remain bullish on IT for the next 6 months also.
Okay, got that. Well, the markets are now toggling, trying to come back into the green. You can actually see some buying emerge just as we were speaking. Some buying action emerging. What does this, trigger, Kunal? This spike that we are seeing in the markets right now. Is it due to the large caps like Reliance buying in those stocks, probably pulling up the markets?
Absolutely. The sideways market is very, very lackluster, as you mentioned in your opening remark itself. But the large caps are doing good. And broadly, again, the Nifty and Bank Nifty have been in the consolidation mode even for the day. So on the lower side, we saw the support at 25,425, resistance is 475. So it's just a 50 points range within which the Nifty is moving. It's the best time for the option traders actually. Just barring those couple of large caps, most of the counters are laggard in today's trade. So yeah, it's a cautious move going forward also, but good for intraday traders actually.
Okay, got that. Now, Kunal, if I have to also ask you, when it comes to certain sectors that are buzzing today, FMCG is something that I marked out in my opening commentary. Since morning, there has been a lot of uptick, be it large players like HUL, mid-cap players, as well as Dabur, some such stocks that are moving up in trade today. They have been an absolute laggard when it comes to the market rallies that we've seen in the last two times. FMCG stocks have just not participated. What would you really, understand from this fresh move? Is it something that probably would make you look again at these beaten down names at this point in time?
Absolutely, Sakshi. The next count, the segment which we look forward to after IT is the FMCG itself and the top pick among this sector. The first is HUL and second is coal power. Now coming to HUL, even after today's move, this counter is still down by around 21% from its all-time high. It's been 7 to 8 months of sideways consolidation. Counter has not decisively crossed 24.25 to 24.50 kind of mark. And even at this level, it's looking very attractive to me. Risk reward ratio is extremely favorable. So yes, I think the fresh move is yet to emerge. I think about 24.50, this counter can show us the levels of 27.50 to 2800. Similarly, when it comes to Kolpal, again, the counter is right near the extreme low level. The all-time high was 3900. It's trading at 24.50, 24.60. If the counter manages to go about 25.50, I think then the upside can be for at least 10 to 15% more even after that breakout. So extremely bullish on selected picks among FMCG packs.
Okay. Kunal, also wanted to just get a sense from you when it comes to the oil and gas space. What are you watching out for in this space? We've been seeing crude oil prices now finally ebb lower. OPEC plus nations want to increase their production. I mean, the numbers that they have given are above all street estimates this time around as well. Finally, we have a cool off on the geopolitical tensions. Is this space also interesting you at this point? And which segment of the oil and gas space would you be really looking at it?
See, at this point in time, I will be really very cautious on HPCL and BPCL kind of counters because they have reached near the peak itself. Look at HPCL for the example. September 24, the high was 450. In between, it came down to 280 and now again back to 450. So these previous highs might act as a resistance, but I think there is some more steam left in BPCL for now, which is trading at 350. I think this counter has the potential to reach till 365, 370. But I think in the recent times, these counters have seen a good momentum. Now it's the time to be a little cautious on this entire pack going forward.
Okay, fair point. Let me also come up to understand a few more pockets. Let's understand the broader sector now. Kunal, are you looking at any key trends that are emerging in the broader markets, mid and small caps? Are you looking at any pockets, or is there very, very stock selective opportunity here? What would you say?
To be very honest, very stock specific. Now, the only reason being Nifty midcap. Now, this sector, this index, which is trading at 13,400, has reached its peak level of September 24 again. And from there itself, we saw the significant correction. And the recent rally was from 10,600 to 13,400. That's been almost 30%. I think too much of the upside for now is done in the indices. We might see some kind of consolidation or a bit of price correction also from the present level, which is very, very likely. So from this level, I think the stock specific moves for next 3 to 4 months will make a lot of sense, where the risk reward ratio is favorable rather than looking at the broader pocket as such.
Okay, fair point. Let me just mark out a few stocks from the absolute broadest index, the Nifty 500, where we are looking at some strong momentum, in some stocks. You have Vibhor Steel Tubes, which is at a 20% circuit. You have JP Power, that's about at a 20% move. PC Jewelers is about a 15% higher. KRN Heat Exchanger is up 14.5%. JG Chemicals is up 14%. You have Orion Pro Solutions. Names like, for instance, even Relaxo Footwear is moving. Tourism Finance Corporation, Swaraj Engines. These are the names that are really buzzing in trade in the Nifty 500. Any key names that strike a chord with you within the broadest index?
So one counter which we shortlisted for initiating a buy today itself was Relaxo Footwear. The logic behind that was that somewhere in the month of November 21, this fund was trading at 1440. Extreme low levels where it made a bottom was near 390 levels, where the counter was down by 72%. We were just patiently waiting for the consolidation to come to an end. This consolidation, which we saw between Feb till yes last week, has come to an end, and today's move is a fresh breakout move on the chart. It is up by around 8%, but still, mind you, it's significantly lower than its 52 weeks high also, right? So this is offering a proper risk reward ratio to me. So on the downside, the support is at around 430. Considering that, one can initiate a buy, positional buy on this, and the positional targets can be 650 to 700. And the second counter, which though I honestly don't like, but has shown good momentum, and that's JP Power. And today only we were discussing about this in our office also. I think this counter is now again showing a fresh breakout of last 3 months of consolidation, 1 year of consolidation, by the way, which is about 24 with the stop of 22. One can go long. The targets can be 35 to 37. But again, out of two, if I were to select one, I'll go for Relaxo rather than JP Power.
Okay, fair point. That's the broadest index for you viewers. Let me now come to the large caps again. Reliance Industries, let's tackle this one. 1542, about a percent higher in trade. Top contributor to the market move right now. Your suggestion on Reliance, we've already seen a very smart move come in from the lows of around 1100 all the way upwards of 1540 now. Do you think this will have more steam? Will it be, prudent to even invest at this stage in Reliance? Are we in for a long haul rally that could probably re-rate the stock as well going forward? How are you looking at the opportunity there?
So if we classify the investors, I mean the market approaching
Yeah.
personalities in two, that is trading as well as investors. So this is not the level for an investor, certainly not, because the extreme lows which we saw in April near to those 1100 where the risk reward ratio was favorable. At 1500, I don't have that comfort. From trading point of view, yes, after 6 days of sideways consolidation, today counter has given a fresh breakout. So with the stop of 1500, one can certainly initiate a buy, and the targets can be 1575 to 1600. But from investor point of view, at this level, it's a big no. If someone is already holding the counter, then trail the stop loss to 1510 and hold. I think 1600 can be potential resistance and the final target for now, but no fresh entry from the long term point of view.
Okay, no fresh entry from the long term point of view. What about Geo Finance from the NBFC space? Along with Reliance, we are also seeing Geo Finance starting to move as well. And that's also after a long haul of 7-8 months, Kunal. How would you look at this one?
So, Sakshi, I do remember this was a counter which we discussed somewhere in the month of April. The only
Yes.
reason for that was in the month of March, it made an extreme bottom of 200. Again, it came back to the same level in April, made a double bottom near 200, and the fresh breakout was at 235. And since then, this counter has consistently made higher top, higher bottoms. In fact, in last 5 days, you can check out the consolidation zone. The support is placed at around 320 levels and the resistance is at 330. Any uptick above 330 will open the doors till around 350, 355. It's a trending counter. So yes, again, from the short term point of view, with the stop of 320, one can certainly keep a watch on it. Targets can be 345 to 350. If someone is holding, continue holding it. But at this level, no fresh entry from long term point of view.
Okay, fair point. So that's the viewpoint coming in. Okay, let's focus on the new age tech basket now, Kunal. We are seeing Nika come back. There is some fresh moves here from the last couple of sessions. Business updates also do show, some of the segments improving for the company. 1.7% uptick for Nika today. What's your view here? We are seeing after a long haul delivery start to perform as well. So we are going a little beyond the Zomato and the Swiggies of the world. First, let's discuss this and then we can talk about the primary names.
Absolutely. The trending counter again, good volumes were seen somewhere in the month of May, and again the similar volumes were seen on 3rd of July. But more or less sideways as of now, since last at least a month, overall trend is positive. So with the stop of 195, I think one can hold on to it. I'm not really comfortable with Nika, only reason being the price move sometimes in between shows the random walk kind of personality. So not really comfortable holding this counter for long term, but from short term point of view, certainly one can keep a watch. Stop can be to 192, 195, and the targets can be 225 to 30 kind of levels.
Okay, fair point. What about now Zomato and Swiggy, the food delivery giants? What is your fresh perspective here?
Absolutely, Eternal was that counter, which again was in the broader consolidation somewhere near 230, came out of that consolidation, picked up in volumes also. Now counter is making higher top, higher bottom formation. So yes, with the stop of 250, one can still buy Eternal with the target of around 275 to 280. When it comes to Zomato, sorry, the other counter that is Swiggy, just let me just open the chart. Yeah, the overall trend is very, very positive. From the extreme lows of 300, the counter is now trading at 377. The new round of buying might emerge above 395. So with the stop of 365, one can hold on to the position. If someone wants to enter fresh, it should be about 395 and the target can be 440 to 445.
Okay, fair point. So I hope this has also helped all of our viewers really understand how to go about it. Another space that's picking up some traction is real estate. Kunal, how are you looking at the real estate moves? Is it looking interesting? Is it probably just in a range and out of your sight right now? How are you looking at the large names vis-a-vis the mid-cap names in the real estate names?
So in the entire space of real estate, we are very selective on the counters, and the only counter which I personally trade and look at is DLF. After the broad rally from almost at 665, 700 levels to as high as 900, now this counter is been in sideways consolidation since 1.5 months. The support is at around 825, and the resistance right now, immediate levels, are at about 850. So it's a wait and watch. Again, any option trader who wishes to pick up a strategy on this can go long on the futures with the stop of 820 levels, and the short straddle can be created with the strike of 860. I think that can be a good positional directional play, and the targets for this can be around 900 levels. So yeah, that can be a good short term trade, but nothing positionally on the charts as of now.
I hope this has also given a lot of clarity there. Let me just try to pull up some more names. IT, let's discuss that one since that will be the first pocket to deliver its numbers in Q1 as well. Remember last time around after Q4, there was a trend that spread on the positive side for across the IT names, large caps, mid caps. They all started to move since they were a long time beaten down area. And after Q4, since the numbers had not come in as disappointing or as worst as the street was expecting, and therefore the steam picked up pace. You can actually see across the board we've seen some good momentum across the board, especially the mid caps also started to catch up with the large ones. How is your fresh positioning ahead of the Q1 earnings on IT?
See again, mainly two companies. The first is a large cap and the second is mid cap company. The large cap is the Infi. Counter is sideways consolidating with positive bias. The fresh breakout is placed at around 1650. Above that, the targets can be 1750 to 1800. So with this view itself, we are holding this counter in our portfolio since 1475 levels, where the extreme bottom was formed and then the first higher top higher bottom came in. That is the first counter. The second is emphasis, which is again that mid-cap IT name, which we like the most. As of now, it has reached the resistance mark. Any decline till around 2750 can be a great buying opportunity with the target of 3100 to 3150. Apart from these two names, we have not really been bullish and constructive on any other names. We are waiting for TCS to cross the levels of around 3550, above which we can initiate a buy. But immediate trades are available in Emphasis and in Infi, which are looking good to us.
Okay, got that. So I hope IT names also coming onto your radar. What about, so we've discussed FMCG IT. The third defensive will be Pharma. Is this story also interesting you at this point in time? We have had a lot of news flow in the last few weeks as far as the pharma space is concerned. We know that Amazon forayed into the diagnostic space. So the diagnostic chains were in focus. Healthcare, there is a renewed focus. There are some demergers announced, as far as Apollo Hospitals is concerned. They want to demerge their entities and separately list them when it comes to their pharma business. So a lot of action is taking place. Frontline OEMs are consistently talking about their new drug discoveries getting approval, in key markets outside of India. What's your favorite space when it comes to the pharma and healthcare pack?
Selectively, two names which I'd like to discuss. The first is Glenmark. In last 1 month, this counter has delivered 15% returns, and this counter is still absolutely trending. And if we just go back and check out May 25 bottom, there was around 1380. Right now, it's at 1860. So it's showing extraordinary strength, and the trend is very strong with good momentum. So with the stop of 1775, a trader can pick up this counter also with the target of around 2000. The second counter, which is offering good risk reward ratio, but there is no major momentum, and that's Sun Pharma. Near to the support level, stop loss being 1650. I think this counter is ready for movement anytime soon. So positional targets are 1850. Again, here short straddle with long futures will make a lot of sense for short-term traders. Even this counter is offering good opportunity for long-term traders. So Glenmark can be for the traders. Sun Pharma can be for trader as well as for investor.
Okay, fair point. Now, Kunal, it's almost 3:20. Could you help us with any BTST or STBT trades? Will it be difficult to point that out, or do you have some names on top of your mind?
Certainly, I do have selective names in my mind. The first is Balaji Amines. I think we discussed about amine sector in the previous
Yes.
session also. These counters are doing pretty good, and in fact in today's session also, Balaji Amine is up by around 6.5%. Absolutely trending. Good volumes are happening on the chart. Clear higher top, higher bottom formation. So with the stop of 1850. I think one can pick up Balaji Amine even at this level, and the targets can be 2100. Second is alkaline amine, which is again the sister concern in the same segment itself. With the stop of around 2300, one can go long. The positional targets can be 2600 to 2650. So these are the two counters which I like the most at this point in time. The third counter, which though showed the momentum in the morning, but it has fizzled out right now. By any chance, if we see the momentum picking up tomorrow, one can keep a watch on that. That's Prince Pipe. Counter is at 362. I think with the stop of 350. If this counter consolidates and turns positive, then with the stop of 350, one can go long. The targets can be 395 to 400 levels. So these are the three counters which can be good short-term as well as mid-term trading ideas.
Okay, got that. So those are the names that one can definitely focus on. One more space that I want to discuss, Kunal, is of course something related to what we have also discussed in this conversation. The capital markets related stocks, brokerage related stocks. Why am I discussing them? Is again, we did see some, weakness in the last couple of sessions across them. And one of the key reasons was again Jane Street and how, there was a ban on Jane Street, a heavy player in the the F&O market because of the ongoing interim order and the investigation that Sebi will be doing now. But when such large hedge funds are absent from trading in the Indian stock markets, it also results in a volume loss, and therefore all the brokerage houses that used to be carrying out trades for such heavy funds, hedge funds, will also be impacted in some or the other way. So we had seen how Nuvama was down, Angel One was down on Friday, and they continue with their some weakness in today's trade as well. How are you looking at this space?
So honestly, Sakshi, I have a little different view here, and that is that these
Okay,
broking firms are not only looking at the broking industry business itself, right? They're offering multi facilities in the same domain itself, ranging
correct.
from the research till broking to wealth management. So I think these counters still have a long way to go. Selected counters which I like the most at this point in time. The first is Motila Oswal. Counter is trading at 930, though now it is reaching near the previous highs of October, November, and December 2024, which is around 1000. I think there is still a lot of room for the upside, even from the present levels. Any correction can be a good buying opportunity. Second is 361 WAM, which is trading at around 1250, reaching the previous high, which is 1320. Any uptick above 1320 will open the doors for the new rally. So I think on selective names, I'm very comfortable and continue to hold the position also. But fresh entry at this level is a no. Any
Okay.
correction can give us good entry opportunity in such sectors.
Okay, got that. So I hope viewers, you've taken down that information as well, since a lot of interest is coming to the capital markets related stocks ahead of a potential NSE IPO that could be coming in, a potential NSDL IPO that could be coming in. Tata Capital, that's also in the works. There are large IPOs that are coming in. Therefore, the interest within the capital market stories is also rising on the other side as well. But let me ask you on the IPO bit itself, Kunal. Have you been looking at the recent IPOs that have come in so far? Which IPO really caught your attention in the recent times that came in? And are you also looking at from the spate of new IPOs that are coming in? Are you keeping an eye on something?
No, to be very honest, we are not looking at it, and it's been almost a year. In fact, the entire calendar year 2025, we have not focused on any IPO as such, so I won't be able to comment much on it.
Let me just highlight for all our viewers, the five big IPOs that came in from in the FY26 from the time this current financial year really started on, to just give a sense of how are they performing. Now, HDB Financial Services was the latest big one that we released, so 12,500 odd crore rupees IPO. It's still trading about 16% higher from the issue price that came in, so that's still on the positive side. Schloss Bangalore came in as well, but it's still trading around 7% below its IPO price. That's one. Ather Energy, it's the electric two-wheeler from Hero Group, linked with the Hero Group that came in. It listed slightly above the issue price and is up about 4 odd percent from its IPO price. AG's Wopac Terminals, another one that came in, is still trading about 3% higher than its issue price. Bellrise Industries, that's another one, is trading at around a 14% above its issue price as well. So those are the kind of stocks that are in focus because of the IPOs there. All right, last 5 minutes to go before we shut shop for the day. But Kunal, your thought process for the current calendar year. We're in the second half. What's your strategy going to be? How are you going to be? See, first half, we've seen a lot of volatility. Probably everything that could go wrong has gone wrong. We've seen wars back home, with India and Pakistan, something that nobody could have imagined will actually happen in the current, age and era. But that has happened. We've had Israel, Iran also war continuing. We've seen change policies, tariff war. We've seen everything possibly that could perhaps turn wrong for the markets. Second half, how are you expecting the markets to really pan out?
It's actually, again, when it comes to geopolitical stress or any major international event, I'm not really very sure how the things are going to shape up. But if I look at the overall market trend, it's absolutely intact. And for the remaining half of 2025, I foresee at least the new highs coming on indices. Nifty might retest the previous highs of 26,250, and by any chance, If it breaks above that level, then 26,750 to 27,000 is very, very likely by December. When it comes to Bank Nifty, it has already surpassed the previous highs. It's absolutely in trend. It's trading at around 57,000 levels. I think the upside can be till at least 61,000 kind of levels. These are the levels I'm watching out for the remaining half of 2025. But again, we should not forget that rather than looking at the index, looking at the stock specific moves in such kind of uncertain environment can be beneficial. So risk reward ratio has to be kept in mind, and selective stock specific moves can deliver better returns than focusing on the indexes.
All right. Well, Kunal, good to be speaking to you. For the last 25 minutes, we've had some fantastic conversation across the broad range of markets, and I'm hoping that this has given enough clarity to our viewers to understand which way is the market headed. Thank you so much. Appreciate your time.
My
We'll
pleasure,
start
ma'am.
wrapping
Thank
up
you
the
so
trade
much.
now, viewers. 3 minutes to go before we shut shop, and we are in the green. 8 points higher, 25,468. Slow, gradual, but finally, in the last few moments, we are seeing some green. Let's hope that we closed in higher on the D Street today, the first day of this week. But of course, the way the trade has panned out, extremely choppy, extremely worried as to what is in the offing. Will we see a deal with India on the trade front today and tomorrow, right before the deadline of July 9th is on course? But remember, our own representatives, Mr. Piyush Goyal, has highlighted that India does not want to just get a deal done because of a deadline. We want to ensure that there is a win-win situation, and only then a deal should be signed. But let's see what are the final contours of what deal gets done, and whether we will have that ahead of the deadline, and of course the earnings season that we've discussed widely with our guest too. Let's look at the market. Beyond the Nifty, you have the top names are HUL, Tata Consumer Products, Nestle, Eicher Motors, and you also have Geo Financial Services. These are the top 5 names as far as the Nifty is concerned. On the lower end, BEL is lower, Tech Mahindra, UltraTech Cement, HCL Technologies, and Tech, these are the IT names that are slightly lower in trade. F&O gainers, Godrej Consumer, Dabur. These are the top movers. You also have names like IFL Finance, something that Vaishali had pointed out right in the morning. That moved up. HUL was another of her top picks. Cummins India, Petronet LNG is something else that she marked out. On the lower end, Jubilant Foodworks declined after that Q1 business update. KFin Technologies also declined. Indus Towers declined. You also have names like Havells that have also slipped in trade today. FMCG clearly was the showstopper today, 1.5% higher, bucking the trend in an otherwise absolute lackluster trade. Oil and gas, infra, these were the names that moved up higher. Let's look at the broadest market. We have actually named a lot of stocks for you to really see here. Nifty next 50 names. Let's see what interesting happened. Adani Power moved up. You had names like ICICI Pru, Varun Beverages moved up. PSU banks like PNB moved up. Hyundai Motor was higher in trade. Samvardhan Motherson. So some auto names also coming back in trade. Let's also get you the NBFC space. What moved up was Nuvama, Home First Finance, IFL Finance, Motilal Oswal. We've discussed that also with Kunal today. This space also moved up in trade. But yes, you have the final print, and it's in the red, 25,454. That's how the Nifty has shut shop, not managing to climb up into the green at the end of the session today. So we just had that brief buying, and again the market did sell off, but flat with a negative bias close for the markets today. All eyes will be on whether there will be a deal in the US that will be coming in India's way, and then the markets will definitely be keeping a keen eye as to how will the deal impact or affect India at large. Stay tuned with Business Today Television even beyond the market hours. We will get you a lot of coverage from the world of business and finance. Stay tuned.